All right, thanks for joining us this afternoon. And as always, lines are muted, but you can engage us with questions that you might have through the chat feature on the webinar. So, mortgage rates look great. We are still firmly under 5% for the 30-year conforming fixed, and rates came down again last week. In fact, 4.5 is in the money on wholesale rates. Potentially even with price leaders 4 3/8, and we're seeing 15-year at 4 1/8 in the money and at all-time lows. So all looking good there. The 10-year Treasury fell from 3.39 at the beginning of last week to end the week at 3.20, really owing in part to the Dubai debt crisis news that surfaced on Thursday. And mortgage-backed securities finished the week darn near all-time highs at with Fannie Mae 30-year 4.5 coupon at 102 and 18 30-seconds 103 would be an all-time high on that index. And then last week, the news has kind of been the trend. Economically speaking, has been relatively mixed. Continues to keep investors kind of doing a little both, putting money into risk assets like stocks and equities, as well as sending large pools of money, sums of money into bonds, and that has accelerated over the last couple of weeks and has continued to bring mortgage prices down. And then another positive for mortgages last week was the successful auction of the Treasury notes in the 2, 5, and 7, and those were met with very strong demand and good news for mortgage pricing. Not this week, but next week we will get longer dated duration Treasury auctions. One of those, of course, being the 10-year. That'll be very important. The Treasury will announce the amounts to be auctioned this week, but the auctions will actually happen next week. And, of course, you're probably keeping somewhat track of the Dubai debt crisis. There's not much really happening there. It looks like the central banks are going to back the debt. Mostly European banks are exposed debt-wise to Dubai. And relatively speaking, it's a very small percentage of worldwide GDP. It's a fraction, frankly. But you never know. These things can be kind of the canary in the coal mine. If you see more of this sovereign debt defaults or asking for extensions, which would be expected to be the case, frankly. So we'll keep an eye on that. And last week, of course, we saw great housing data and saw some of the fastest sales paces we've seen since early 2007. And inventory drawdown near 7 months at the current sales rates. So supply and inventory down near what you would call normal levels. 6 months would be considered normal, and with 7 months of supply, we're awfully close. Employment continued to improve. We actually cracked for the weekly jobless claims the 500K mark at 466. We're looking for that number to continue to improve this week as well, and that we get that every Thursday. All right, well, the big week ahead, really there's a lot. The activity, or the calendar looks pretty busy. The activity really will be building essentially to Friday when we get the monthly employment or unemployment data. And it's expected that will have improved to minus 120,000 versus last month at minus 190,000, and then unchanged at the unemployment rate that we had last month of 10.2%, that they're expecting that to, again, be 10.2%. And so that will be, markets will be a little jittery, probably volatile, frankly, heading into that data. We will get on Wednesday a view of how that data might come in when we get the ADP private employment estimate. It doesn't include everything else, doesn't include government. But ADP you can usually use as an estimate to how Friday's data will look. And so if we looked at the calendar, today we've already had the Chicago survey. The manufacturing survey, it was been better and improving. Really no market reaction to that, as typical with those reports, but it does show that the larger districts continue to improve on the manufacturing side. And then tomorrow, we're at 10 o'clock, nothing pre-market, but at 10 o'clock Eastern, we'll get 3 reports, construction, spending, and pending home sales of relatively moderate impact. The construction spending is both residential and commercial. The pending home sales, of course, are signed contracts not yet closed. The markets will be watching those. But really what the big one that will come out at 10, so you really get 3 at one time here, will be the ISM Manufacturing Index. And it is of high impact typically. And it's measuring, of course, manufacturing growth. and it's expected to come in around 55, and last month it was just slightly over 55. And to note, there's the pivot point of 50. The gauge is 0 to 100. 50, anything over 50 pointing towards economic growth, anything under 50 pointing versus contraction. So as long as it comes in as estimated and basically where it was last month, it will continue to reaffirm that there is economic growth, albeit slight, and that being in the manufacturing index. And then the trail on Tuesday, we'll get some auto sales information. It should be of, actually it's probably more like a low impact data point, frankly. And then Wednesday morning, we'll get, of course, every Wednesday, we get the MBA report on mortgage applications, low impact, but noteworthy for our industry. So we'll see, would expect mortgage applications have upticked here as rates come down. ADP employment estimate, that's a big one, 815, so pre-market. We'll get that measure of the private sector employment. It's expected to be minus 155. If it comes in that low, we should easily see Friday's data come in as estimated and continue to support the markets where we're at. Fed Beige Book will come in on Wednesday as well. That report really just, we'll take a look at the deeper dive into each district on what they reported to the Fed for their meeting in early November. And typically, it's already all been exposed, so there really should be, it should be a low impact data point. We've listed as moderate. You never know what you'll get, but shouldn't be much that comes out of that would surprise the markets. And then we get, and actually Thursday will be a big day. You know, right out of the morning we have a couple data points in employment costs and Q3 productivity. You know, those are basically low to moderate data points. But at 8:30 we also get the weekly jobless claims. Can always be a mover. The market will be expecting that data point to come in under 500,000 again. And then an hour and a half later at 10 Eastern, as the markets have opened and lenders are setting rate sheets, we'll get the ISM service sector data point. And so that's a lot like the ISM manufacturing index in that this one will actually then rate or gauge retail financial services growth, et cetera. And that one's much more impactful in that manufacturing, again, related manufacturing, typically for bonds, not too, it's relatively market influential, but anything that relates to the service sector, consumer, which makes up 2/3 of our GDP, can definitely be a market mover. So we'll get some interesting data points on Thursday. And then it all builds to Friday, so pre-market, 8:30 Eastern, we'll get an hour before or so rate sheets are set. We'll get that employment data point. And again, it's expected unemployment rate to stay unchanged at 10.2%, but the number to decrease to minus 120,000 versus minus 190,000 last month. And then on Friday, we'll get some October orders, low to moderate impact, frankly. That'll trail. So everything is building towards Friday. Interest rates are extremely low where they're at. Mortgage-backed security prices are very high. And we can continue to see that sustained this week with the Dubai fallout, some uncertainty there, as well as what has been a pretty robust appetite to lock up profits and put money into safe harbor assets like bonds. We should continue to see, well, maybe some choppability here through the process this week, but frankly, you should really see pretty good support for mortgage pricing the rest of the week. At these prices, you still hold a lock bias. I don't know that there's much to be expected to be gained here unless the market, unless there's a big turnaround, much more fallout from Dubai or other type of economic data that would come in, much less than expected. You could pick up maybe another eighth or quarter here, but as we get close to all-time highs on mortgage-backed securities potentially. But with the risk that some of this data could come in hotter than expected, meaning that there would be more economic growth and employment growth than has been baked into these numbers as estimated. That would be the risk this week, is that these things start to come in, ADP, manufacturing, the ISM service sector, and then, of course, the monthly employment data. That comes in better than anticipated, and that would certainly send money flowing out of bonds and into stocks. So we'll keep an eye on that. That's the week this week. Stay close to our emails and alerts. And if you're not already subscribed to the alert service, anybody on this call has already subscribed in one way or another to a service, but if you're not part of our rate alert service, which gives you intraday pricing moves, anything that the market, big changes in the market that you need to be aware of that will change pricing one way or the other, you want to subscribe to that service, and Josh has that link up here on the screen. You'll find that tab also on our website for Rate Alert service, and you can sign up there to ensure that you get those intraday alerts throughout the day as well. And then if you're not already, many of you on this call are already accredited mortgage advocates. If you're not, certainly check out the lender help link that Josh has here on the page. If you're going to the website, you'll click where I'm a lender, and you'll find the features and benefits of that program and how you can become a certified home loan advocate. Definitely look into to that, and those in the call could attest to how that's helped their business by just being part of that program and ensuring that consumers and referral partners know that they are fair, ethical, and consumer-friendly lenders. Rate Advisory and Alert Service is also part of that program. There's many other features and benefits that you'll find. Check that out. If you have any questions, comments, certainly email us or give us a call. Well, thanks for joining the call today. It doesn't look like there's any questions in the queue. If you have anything that comes up through the week, certainly take advantage of the Ask the Expert feature, and we'll be glad to get back with you as soon as we can on our comments and views on the market. Have a great day.